FXCM has enhanced its no dealing desk Forex execution by adding price improvements to all order types. So if a more favorable price becomes available while your order is executing, FXCM will automatically give you the better price. Let's take a look at an example to see how this works. On this chart, you can see a buy position for the euro-dollar at 1.3250 and a limit order to close the trade at 1.3275. As we move forward in time, the market price rises, eventually reaching the limit price. In fact, the market price has exceeded the limit price to a more favorable price of 1.3280. Without the enhancement of price improvements, the limit would fill at the limit price. But with FXCM price improvements, the limit will fill at the better price so long as liquidity is available. How does a better price become available? With FXCM's no dealing desk model, many liquidity providers may be quoting prices for a single currency pair at any one time. For example, liquidity provider B may quote 1.3275, which triggers the limit order. Only milliseconds later, liquidity provider A may quote a better price of 1.3280. Because the better price is received before the limit executes, FXCM's no dealing desk engine automatically fills the order with liquidity provider A's better price of 1.3280, providing a 5 pip price improvement on the trade. And that's price improvements. If a better price becomes available before your trade executes, FXCM will always give you the best available price. These prices include our markup, which may vary based on account type and liquidity provider. Welcome to this episode of Forex Trading Tips. Today's topic, trading with limit and limit entry orders. FXCM offers a wide range of order types through its various trading platforms, which allows a trader to approach the markets from many different angles, using any number of different trading strategies. The most common order type is the market order. This order is usually the best option when a trader needs to enter or exit a trade on the fly. Market orders get you in and out of trades right now at the current market price. At FXCM, we found that most traders use market orders to open and close all of their trades, even when a different order type may be more suitable to use. So let's talk today about limit and limit entry orders to help you become a more flexible trader, and maybe even help you make some more money. A limit entry order differs from a market order in two primary ways. First, a limit entry order requires that you specify an entry price where you want to enter a trade. So let's say the market is trading around 85.7 and you want to buy, but only if the price falls to 85.3. With Trading Station 2, click on the Entry button. Select a currency pair, buy or sell, and then type in 85.3. Once you click OK, the order appears in the Orders window. If the market falls to 85.3, the order will trigger automatically and enter you into a buy trade, on one condition. And this leads to the second way in which a limit entry order differs from a market order. A limit entry order can only fill at the requested price or at a better price, where a market order can fill at the requested price, at a better price, or at a worse price. Let's assume that the limit entry order to buy at 85.3 is triggered. However, before the order fills, the price changes to a worse price of 85.35. If this happens, the execution will automatically halt, and the order will once again wait for a price of 85.3 or a better price to become available. With this order type, you can never receive negative slippage, but you could receive positive slippage. Now let's move on to limit orders. A limit order is identical to a limit entry order in that you request a specific price for the order to execute, and the price the order can fill at is only filled at the requested price or at a better price. The only difference between the orders is that a limit is used to close a trade since it's associated with a specific trade. Going back to our prior example, let's assume that the entry order to buy at 85.3 executes, so a live trade is now in the market. A limit order to close this trade can now be created. Within Trading Station 2, click on the empty cell in the limit column, specify an exit price, and click OK. If the market price reaches the limit price, the order will trigger and attempt to close the trade at the requested price or at a better price. So there you have it, limit and limit entry orders, two new order types that you can consider using to open and close trades. At FXCM, we prefer to see more clients opening and closing trades with these order types because this way, clients can ensure that they will always get their requested price or a better price. Price improvements can help individuals who trade news events take advantage of market volatility and potentially make more money than they could before. Here's how. Assume that you often trade non-farm payrolls and the next release is just around the corner. After looking over a number of past NFP releases and seeing how the euro-dollar pair is affected just after the release, you notice an interesting pattern. As soon as the NFP number comes out, the market spikes up or down depending on whether the number is seen as positive or negative for the U.S. economy. But within 15 minutes or so, price action seems to always revert back to price levels seen prior to the release. Based on your research, you expect the upcoming NFP number to be positive for the U.S. economy. So you expect the euro-dollar price to spike down after the release and then revert back up shortly after. To take advantage of this, you place a limit entry order to buy at 135.50. Why a limit entry order? Because a limit entry order will only fill at your price or better. The news release turns out to be positive for the U.S. economy, and the euro-dollar quickly spikes down as you predicted. In fact, it spikes down much further than you expected, dropping a total of 35 pips, 10 pips beyond your limit entry order. Previously in this trading situation, your limit entry order would have been filled at the price you requested, in this case at 135.50. But with FXCM price improvements, FXCM gives you the better price of 135.40, which gives you the chance to make 10 additional pips on this trade. Finally, about 15 minutes later, the euro-dollar reverts back to the 135.75 level, and you close out your trade for a profit of 35 pips. And that's price improvements. If a more favorable price than the price you requested becomes available before your trade executes, FXCM will always give you the best available price. These prices include our markup, which may vary based on account type and liquidity provider. Price improvement is subject to order type, size, and available liquidity. FXCM has recently enhanced its no dealing desk Forex execution model. It now includes price improvements which can help scalpers make more money than before. A scalper typically tries to gain only a few pips with each trade that they place. This means their average return per trade may be as low as 1 or 2 pips. And because of this, they often place tens, hundreds, or even thousands of trades within a single day. So for scalpers, it's the little things that matter most, and every pip counts. Consider a trader who has placed 25 trades. This table shows the hypothetical profit and loss for each of those trades. 21 were profitable, and 4 were not profitable. The net profit for all 25 trades was 42 pips, or $42, assuming a 10K trade size was used. Now, there's no guarantee that an order will receive a price improvement, but for illustration purposes, let's consider a few alternative scenarios. How would the net profit change if a price improvement of 1 pip was received on one of these trades? What about if 2 trades received a 1 pip price improvement? What if 2 trades had received a 2 pip price improvement? So scalpers, a price improvement could mean an extra 1 or 2 pips in your pocket, or an extra 3 or 4 pips in your pocket. Over the course of tens or hundreds of trades, price improvements could mean lots of extra pips. Additional pips here and there? Which scalper wouldn't be happy with that? Increasing your chance of receiving a price improvement can be done in a number of ways. FXCM recommends opening trades with limit entry orders and closing trades with limit orders whenever possible, because these order types only fill at your requested price or better. While other order types can receive price improvements, they can also experience negative slippage if a better or requested price is not available. And that's price improvements. If a more favorable price than the price you requested becomes available before your trade executes, FXCM will always give you the best available price. These prices include our markup, which may vary based on account type and liquidity provider. Price improvement is subject to order type, size, and available liquidity. FXCM's enhanced no-dealing desk model, which now includes price improvements, can help those who trade weekend gaps make more money than before. Here's how. Let's assume that it's Friday, just before trading closes, and the euro-dollar pair is trading at 1.2510. The pair has been approaching this important resistance level for weeks, but has always been unable to break through. And you've been trading these short moves up, taking profits near resistance for some time. Over the weekend, the G20 economic policy meeting is taking place, and you're confident that the outcome is going to be very positive for the Eurozone. If your prediction turns out to be correct, you believe that the euro should get a significant amount of support when trading opens on Sunday, enough to push the euro-dollar through resistance. So you decide to leave a long position on the euro-dollar open through the weekend, and you place a limit to take profits just outside this resistance area, at 1.2550. The G20 results are just what you wanted, giving a boost to the euro. When trading opens Sunday, the euro-dollar pair gaps 40 pips beyond your limit price to 1.2590. Previously in this situation, your limit would have closed at the limit price if liquidity was available, in this case at 1.2550. But with FXCM price improvements, your limit fills at 1.2590, providing you an extra 40 pips on your trade. And that's price improvements. If a better price becomes available before your trade executes, FXCM always gives you the best available price. These prices include our markup, which may vary based on account type and liquidity provider. Price improvement is subject to order type, size, and available liquidity.